Our long-term forecast was updated in a study we recently published, and the results have increased significantly. However, we believe it is terribly undervalued. Why is it the case? In the last few reports, two assumptions have been modified. First, according to our previous model's bull scenario, Tesla would lose a third of its 17.7% worldwide market share, including China, that it held in 2018. That it would lose when Audi, Porsche Taycan, and Jaguar entered the market as the Tesla killers. We're going to reveal today the closely kept secret that has been requested by investors, the best time to purchase Tesla shares and ride the company's meteoric rise to millions of dollars. But wait, there's more. This story has a twist, a hint of mystery, and a dash of suspense that will have you gripping the book throughout. This is a historic occurrence that has the potential to alter the course of the game forever. It is not your typical stock market prediction. Cathie Wood, the Oracle of Wall Street, is holding a date that might lead to unimaginable wealth in a world where aspirations are dashed and fortunes are made. Everyone's burning question. When is that date? What's the secret behind its magic? How can you grab this fantastic chance to become a multimillionaire? Let us briefly preview what lies ahead of us before delving deeper into this mystery. We'll examine the stock's astonishing growth, analyze its high-stakes game, and expose the potential of artificial intelligence to catapult Tesla to new heights as we uncover the stock's riddles. So, dear viewers, buckle in as we take you on a voyage into the heart of the stock market, where there are enormous stakes, genuine suspense, and limitless opportunities for profit. You won't want to miss this story. But before we go any further, please remember to show your support by leaving a like on this video and signing up for Tesla stock news. Now, let's begin this video without further ado. An increasingly popular trend is the quick departure from conventional internal combustion engine vehicles that we are currently seeing. Some voices argue that because the internal combustion engine market offers greater profitability, businesses should focus only on it. There is also a commitment to turning electric vehicles into a successful business. It is noteworthy, though, that Tesla's approach, which lowers prices while preserving production capacity, presents a formidable obstacle for others to follow. It could be an impossible assignment for them to do. It's important for viewers to realize that advising Ford to stick with internal combustion engines and adopting a short-term mindset is not the wise course of action. In actuality, they are forced to embrace the trend of electric and autonomous vehicles, or else face the possibility of going out of business. There is a noticeable surge in the number of electric vehicles being added to corporate fleets, indicating the growing demand for electric vehicles. This change is mostly the result of electric vehicles needing far less maintenance than their gasoline-powered equivalents. The overall mileage of electric vehicles on the road is increasing more quickly than the initial move toward electric vehicles as businesses like Hertz increase the size of their fleets. Under this scenario, energy corporations would reconsider the ecosystem of fossil fuels in which they have invested, which could result in volatility in oil prices. It is important to remember that this volatility does not necessarily indicate inflation, even if it may show up as lower highs and lower lows. Instead, it's the outcome of money leaving the industry. Let's examine a few numbers from the previous month. Car sales have showed a notable upward surprise, exceeding projections to reach 15.9 million units versus 14.8 million units expected. There are various reasons for the strong performance in car sales. Despite economic swings, consumer confidence is surprisingly stable. Furthermore, automakers have persisted in responding to changing consumer demands, with many concentrating on creating cars that are more environmentally friendly and fuel efficient. It's important to consider if this upside is coming from dealer inventory building or from pent-up demand after supply chain interruptions. These questions will soon have answers. Now that Tesla just decided to change the price of its cars, there is a little uncertainty. Is there little demand, thus they're decreasing prices? It's a legitimate query. According to Tesla, it prices its cars strategically in order to keep up full manufacturing capacity. Tesla's margins are still better than Ford's and GM's even with these price cuts, so this isn't necessarily an indication of weakness, but rather a strategic decision to maintain the production line's effectiveness. One way that Tesla sets itself apart from its rivals is in its pricing approach. In 2023, Tesla has become a dazzling star and won my favor. Its spectacular rise, which saw it leap by an astounding 15% in just 6 months, was in sharp contrast to its unimpressive 2022 performance. This comeback, which has seen Tesla's stock rise over 150% in just 6 months, has thrilled investors like myself who invest in both retail and hedge funds. On the other hand, Tesla's stock price has plummeted during the last 30 days, falling by around 25%. Investors who have been riding the success wave of electric vehicle and battery manufacturers for years may find this latest downturn to be an unwelcome shock. After all, by July 18th of 2023, Tesla's shares had soared by an incredible 170% year to date. But at that point, things started to change in Tesla's favor. Remember that there has only been a month of decline to evaluate, so it's still early days. However, since July 17th, Elon Musk's business has been gradually losing market value. It has lost more than 23% of its peak, which was over $290 per share. In reality, Tesla's stock closed Wednesday night at about $225 a share, which is about 2 months below its lowest price since early June. Nevertheless, because Tesla surged by more than 170% in the first half of the year, there is no reason for undue anxiety. Effective cost control in electric powertrain technology is one of the main reasons Tesla is able to maintain reduced prices. As cumulative unit production doubles, expenses drop by a staggering 28%. On the other hand, gas-powered cars are no longer seeing these kinds of cost reductions because they have reached a mature stage. This puts a significant amount of pressure on their profit margins as they are unable to match Tesla's pricing strategy. During Ford's last earnings call, a notable event was revealed. The company estimated that its electric vehicle division will lose $3 billion in EBITDA this year. As opposed to this, their internal combustion engine vehicles are expected to generate a positive EBITDA of $7 billion, mostly due to their truck division, which is expected to generate $6 billion in profits. During our brainstorming session, this realization gave rise to an intriguing viewpoint that was discussed. It was stated that by releasing these financial information, Ford is effectively outsourcing its company strategy to its stockholders. These figures seem to suggest that Ford is inclined to prioritize profitability in the production of electric vehicles, while simultaneously concentrating on the more lucrative market for internal combustion engines. It remains to be seen, though, if Ford can effectively adopt Tesla's tactics. Is this a fantastic opportunity for investors to buy the dip in the largest automaker in the world? Is a question that comes to mind as they ponder their next move. Notably, historically, the majority of dips in. Tesla's stock has shown to be a good investment during these times. In retrospect, events like as those involving Cathie Wood, who purposefully bought Tesla shares in 2022 and this year after 10% or even 20% declines, then sold it when the price increased by 20%, come to mind. Many others, myself included, have done the same, jumping at the chance to purchase during the 20% decline in Tesla's price. But it's important to understand, as we all know, that past performance does not guarantee future outcomes. Despite this, investors in Tesla stock have a flawless track record of financial success. You only need to glance at this graph to see the point if you need any proof. Let's now temporarily ignore the individual stock prices and concentrate on the pattern of the graph, which is a mountain. This mountainous structure represents the fact that Tesla's stock eventually rose again after each decline. Even in the difficult years of 2022, Tesla's stock always rose back after a dip. In 2023, the pattern persisted, with Tesla's stock hitting its lowest point in January and then starting to rise. It then recovered in February, increased in March, had a minor decline in May, then had a significant increase in June and July when it reached even higher levels. The lesson from this is simple. Investing in Tesla's shares at a discount has always turned out to be a very rewarding move. Let's now address the urgent subject that has been on everyone's mind. Is this the right time to purchase Tesla stock at the discount? It's probable that most Tesla investors are familiar with the company's incredible growth trajectory. In case you missed it, we talked about how Tesla skillfully managed its growth trajectory earlier this month, going from building 350,000 cars in 2019 to an astounding 1.3 million delivered in 2022. An incredible accomplishment, despite barely missing the 1.5 million milestone for a 50% yearly growth. It's critical to acknowledge that a significant portion of Tesla's achievements and potential are already reflected in the stock price, which is a factor that merits consideration. At the moment, Tesla has an impressive price-to-earnings (PE) ratio of 64, which is much higher than industry peers like General Motors at 4.5 and Toyota at 10.6. For example, Tesla has yet to reach its lofty objectives, whereas Toyota has already accomplished a great deal in its history. But it's important to remember that Tesla has plans for the future that go beyond just making cars. Elon Musk's remarks regarding the company's dedication to fully autonomous driving, as well as the latest advancements in AI, provide an encouraging picture of the company's future. A tweet from someone who first questioned Tesla's ability to drive itself, but has since experienced Tesla using computer vision to drive them around San Francisco, brought attention to this development. The company's potential is further shown by Elon Musk's answer to this tweet, which makes hints about developments in artificial general intelligence. While it may be a little disconcerting, AGI is an important milestone that points to a future in which AI technology will be able to solve problems that humans can. In summary, the choice of whether to invest in Tesla now or later demands a bold belief in the company's future possibilities. The company's aggressive objectives and recent advancements in AI suggest that there may still be room for significant development, despite its high PE ratio at the moment. Remember that Tesla has a long way to go, and that this is an exciting area to follow. We've explored the fascinating world of Tesla shares in this chapter. First, we wondered if this was the proper time to purchase the dip in the biggest car maker in the world. Tesla has demonstrated remarkable growth in the past, going from 350,000 vehicles in 2019 to 1.3 million in 2022, just missing the 1.5 million mark. It's unclear, though, if such quick growth can be sustained in the long run. By contrasting Tesla with industry heavyweights like Toyota and General Motors, we examined the relevance of the company's high price-to-earnings (PE) ratio. Tesla presents an alluring image of its future potential, propelled by its dedication to fully autonomous driving capabilities and advancements in artificial intelligence. The company's trajectory is emphasized by the recent advancements in AI that were highlighted in a tweet. Do you believe Tesla will be able to sustain its remarkable 50% annual growth rate going forward? Regarding Tesla's high price-to-earnings ratio in relation to others in the industry, what are your thoughts? To what extent does Tesla's potential get enhanced by current advances in artificial intelligence? Lastly, would you consider purchasing Tesla stock now that it has dropped? If you felt this conversation was insightful and thought-provoking, please think about helping us out by liking this video and becoming a Tesla Stock News subscriber. We appreciate your time and hope to see you in our upcoming videos.